Hello, traders. This is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. This is part 3 to a 3-part series to the daily bias recognition. I will discuss a simple approach to getting entries on the lower time frame in the direction of the market trend. Follow along. Today's agenda will be as follows: trend identification, intraday filters, and intraday entries. Trend identification. The bullish trend formula is higher swing highs and higher swing lows lead to bullish trends. The bearish trend formula is lower swing highs and lower swing lows lead to bearish trends. If you're unfamiliar with this formula, please refer back to episode 1 of the series. Here are some filters I consider before going into a new trading day. Day of week. Ideal trading days are Tuesdays, Wednesdays, and Thursdays. Range cycle. The small range cycle should be in play going into a new trading day. Time of day. Trading during the London and New York session is suited for trade ideas. Asian range. 20 to 40 pips in size gives ideal trading days. News events. Medium to high impact news should be present during one of the sessions. Intraday entries are as applies. I keep it simple for myself so there's no confusion on what I'm looking for. For the buyer, I'm going to buy under MOP. MOP stands for midnight opening price. Buy under the Asian low, buy below the London Open, and also buy below the New York Open. Inverse as the seller, I'm going to sell above MOP, midnight opening price, sell above the Asian high, sell above London Open, and last, sell above the New York Open. Methodology. The time frame we're going to be looking at is the 5-minute. Once the bearish trend has been confirmed on the daily time frame, wait for a trade opportunity on ideal trading days. Seek to sell in premium ranges during London and New York sessions, or seek to sell above the Asian session high. Inverse for the buyer, we're still looking at the 5-minute time frame. Once a bullish trend has been confirmed on the daily time frame, wait for a trade opportunity on ideal trading days. Seek to buy in discount ranges during the London and New York session, or seek to buy below the Asian session low. Let's take a look at some examples. Dollar example, as we can see with the bullish formula, we have a swing high broken plus a higher swing low. This swing low is physically higher than the most recent one we have in price, which is here. The fact that we have this formula playing out, we're most likely going to see a bullish trend unfold within the next couple of days or the next week. We're going to use some of that lower time frame entry ideas and some of those lower time frame filters that I was talking about as well. So let's see what we're looking at. So we have Monday, we're going into a Tuesday. It's ideal trading day. We also can see that the market's in a small range cycle. Looking at the bodies of the candle, these candles are small compared to the last 3 to 4 or 5 days. You can see this candle is large. These candles tend to not be larger than this one, so the market's still in a small range cycle. Going into Tuesday, we're most likely going to expect a large range cycle to kick in and buying opportunities to unfold below midnight opening price, London Open, New York Open, and even the Asian session low. Let's see what unfolds. You can see the price action shoot straight up. You can see it's chasing buy side liquidity above swing highs. So we have one here and we have one here. Let's see what happens on the lower time frame on the 5-minute. So looking at the 5-minute, you can see this is Tuesday, the ideal trading day. We have midnight opening price, which is here, MOP. And we know anything that's underneath MOP is a discount, and we want to be buying at a discount as the intraday trader, as the retail trader. It makes more sense because we're buying cheaper. We can also see, even after price drops below midnight opening price, we can see it takes out the Asian session low. So we go from here to here. We can see that the Asian session low is purged at one point in time. And that's a buying opportunity. Now, many people may ask, where should I buy? I generally would say a 5-pick increment, either above or below the low or high, to set the buy or sell set order. So we could see that price drops below it about 5 pips. That's where you would buy. And if it drops any lower and you're able to risk more than what you want to, and you still have a cushion of risk to maximize for the day. Let's say your max risk you want to take is 2%. Let's say price drops below here by 5 pips. You risk 1% on that one trade. Let's say price drops another 5 pips. You risk another full percent. That's 2. You're maxed out. You don't look for any other trades for the day. However, if you're someone that's more conservative, I would go 5 pips, risk that 0.5% or that 1 full percent, and hold for the rest of the day. We can also see that price does not come below London Open. So there was no opportunity here to go long during the London session, the opening price. If we come to the New York session, however, we can see that price does drop below the opening price at 7 a.m. This is 7 a.m.'s candle, and price drops below it and gives a cheaper opportunity to buy for price to continue to expand higher. And we can see it even occurs during that news event. So we had core inflation, we had inflation rate there for the Bank of England, and price continues to rally up for the rest of the day, taking out that swing high here and that swing high here on the daily. Now, this all comes after finding the trend on the higher time frame daily. Let's take a look at a seller opportunity as well. So we're looking at the DXY. We have price coming down and taking out this swing low. So swing low is broken. And shortly after, we get a lower swing high. What makes this a lower swing high? Well, we can see it's physically below this swing high formation that's up here. So this is the higher swing high, and this is the lower swing high. Once we have that swing low broken plus lower swing high, we have a bearish trend that's most likely going to unfold within the next couple days or week. We can see that this is Monday, that we have the confirmed lower swing high, and we're going into Tuesday. Tuesday is an ideal trading day. So we're going to look for sell opportunities above midnight opening price, above the Asian session high, above New York opening price, and London opening price. Let's see what unfolds. We get a large range candle because we can see the market's in a small range cycle before we even go into Tuesday. So it's a very good intraday filter I like to use here. Let's see what happens on the lower time frame. So we go down to the 5-minute, scroll over. We could see, looking at the Asian session, the high of the day, high of the Asian session, is broken. So the Asian session high is broken. That is a selling opportunity above the Asian high. So the Asian session high is broken. There's a selling opportunity here. Retail traders are most likely looking for the breakout higher, but we've already established that most likely the trend is bearish. So we're not looking for longs, we're looking for shorts. So this is a short opportunity here. You can also note out the opening price of the day right here. Got midnight opening price, which is 12 a.m. New York Eastern Standard Time. If the true day open, you see price runs above it at one point in time. We got that double confluence here. We're above midnight opening price and we're above the Asian session high. High probability sell opportunity. We also have the London opening price here. You can see how price does run above it. We'll leave it as LO. Price runs above it, and also double confluence. It runs above midnight opening price during this time period, 2 a.m. to 5 a.m. Price runs above the London opening price, which is a premium territory. It's ideal as a retail trader to find sells in a premium territory. Price runs above the London open, and even the midnight opening price hits it and then it sells off. Let's see what happens during the New York session. You can see during the New York session, we have the opening price here. We can see that price comes back exactly at the open, and we'll double check to see what that high and open is. This is the New York open. We can see the opening price here. We can see it's at 105.59, and we can see the high of this candle is at 105.59 as well. So exactly on the pip, hits it, and then sells off. We can also see that happens when that news event occurs in England with the Bank of England, and price continues to sell off. But you notice the confluence is here, and how we're able to arrive to a possible scenario for a sell. This brings me to the end of the video. I hope this video was valuable to you as a trader. If you enjoy this video, then I think you'll like these two as well. Please subscribe, like, or comment for more high quality Forex videos. As always, safe trading, leave the indicators alone, and peace.